Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing in social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in and take a look, see what's going on today. If you want to follow me at Finance, and if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, sectors, looking for investment opportunities, sharing those opportunities with everybody in the community. I do that through midweek updates on Tuesday, Wednesdays, and I also do that through Q&A sessions on the weekend. If that's something that you like or want to gain some exposure to how I'm playing this commodity bull market, sign up. Specials a coupon code. You can get $25 off the first month only on a monthly membership and a $100 discount on a yearly membership. And you can always swap from a monthly to a yearly. Against all odds, when I was impatient, my grandmother used to sing, "Patience, patience, seldom held by a woman and never by a man." It drove me crazy as a kid. Now I hear it in my head every time I stare at this chart. This is XLE, the energy ETF. Now I understand. I understand energy is down today. It is down quite a bit. Same with oil. So it's not like I'm recording this before or knowing um, the pullback that we're undergoing. We are up against resistance. We could pull back from here and do a loop of some sort. Completely possible, loop around or do whatever. But we got up to that resistance for a reason. I don't think we're going to go back down to 2020 lows. Could we come back to some resistance under here? We definitely could. Not saying we can't. But energy is a part of the commodity bull market. A lot of things in commodities look pretty well. So are we going to get an end of trend washout sale like this 2020 end of trend washout sale? Could we get a washout slingshot move? We could. I don't know if we will, but we definitely could. A lot of people, they try to predict the market where they make these predictions that the market's going to go up, it's going to go down, and then maybe perhaps they put money based off that prediction. What I've found to be more accurate, maybe not accurate, but more reliable, a better strategy to make money is to buy what's undervalued and then to wait for the market condition to come into favor. And that might take a little bit. It may not be 4, 5, 6 months. It might be a couple of years. I did it with platinum. A lot of people were saying I was wrong on platinum, but it's up 70% this year or so, whatever it is. I don't check every day. 60, 70% up. And I did this with other sectors, lithium, gold and silver back in 23, 24. Some of those are up massively. I think energy is in the same situation. We're down in energy. We haven't broken out of this pattern yet, and patience is everything. Uh, this is, I think, one of the most undervalued sectors in the market when you look at it from a cash flow um, to market cap type of valuation, or assets to debt to assets or assets to debt, cash flow to market cap, all price to book. There's a lot of really good uh, opportunities in the energy sector. Coming down, first minute, seeing a lot of commentary about refineries not buying back silver because it's too expensive at $50 an ounce, which is false. Capital is not the problem. Capacity is the problem. Refineries are trying to get 1,000-ounce bars by airplane to London because, well, London doesn't have it and lease rates have spiked to 89%. Junk silver, which already flooded market back at $40 an ounce, takes longer to process back into LBMA approved 1,000-ounce bars. At this moment, refineries don't want more junk. This too shall pass, but what won't pass? The infrastructure and metal to support an over-levered paper market that suddenly demands physical. Real wealth turns out not to be paper. It is not paper. Hi ho, silver. And this is it. Silver refiners halt buying. A major North American refiner just confirmed silver markets shut down last night. No large refiners are buying right now. Refining is backlogged. Spot is above futures, and the hedge market is breaking. This is what a physical shortage looks like. That's what it looks like. And we're going through it right now. Let me put this into perspective for you. There are two more Fed rate cuts coming in 2025. President Trump is planning a $2,000 stimulus package for families. 30 plus altcoin ETFs are filed with SEC. Jerome Powell will print before Christmas. You are not bullish enough. So we're going to get a couple of Fed, maybe Fed rate cuts. We'll see what interest rates do. And if he throws the stimulus checks out there, do you know what that reminds me of? Reminds me of 2020. Reminds me of 2008 and 9. Remember they did stimulus back then? Uh, George Bush sent out checks. Good old George Bush Jr. And we're doing this again. I mean, really? So you know what? You know what works pretty well. This is my guess. They're trying to get rates down. They got to hit oil because oil and rates are they've historically been correlated, but we've seen a big disconnect between rates and oil recently. And then they come out with this news here. This was, I think, October 2nd or beginning of October about potential stimulus checks for families. That's very interesting. It's almost like they're priming the system and trying to like push it down before it's going to rocket back up if they were to send this money out. Interesting. Just in, President Trump considers sending U.S. taxpayers up to 2,000 stimulus checks using tariff revenue. Well, tariff revenue is paid for by American companies, and then we're just going to redistribute it to people that he sees fit. That seems pretty interesting. Coming down. As I said yesterday, we are in a cold war for commodities, and it's escalating quickly. And this is Trump talking about China, and they're talking about rare earth materials, uh, stuff that goes into magnets. And I don't know, this is a long thing. I'm not going to read all this, but are we in a post Cold War for commodities? Yeah, I think so. We're at the beginning of this commodity bull market. The move has already started. We're at the beginning of this move, and now things are going to start to heat up. They're going to start to heat up. All right, the Mag 7 ETF is plunging versus gold, capital rotation in plain sight. That's what I mean by heating up. Mag 7 ETF versus gold, it is plunging. Gold is outperforming the Mag 7. Whether Mag is going down or gold is going up or a combination of both doesn't matter. Each of these big moves were commodity bull markets, every single one of them. If you look back here, this is really short term, I should say. This is kind of like a big drawn out head. But when you look on the bigger picture view, because this is a short term time frame. If you look at the bigger picture view, when that occurred, it occurred in the 70s. It occurred in the 1930s. We had a commodity bull market back then too. It occurred in 2001 or so into 2000, I think 8 or 11. That was a commodity bull market. It's happening again today. So we are entering this big commodity bull market. A lot of people are going to doubt things. If prices move in a way that goes against the commodity bull market, even in the short term, they start to doubt it, even if it's like a week long move or something like that. This here is just it's like getting hit, getting hit, getting hit, and then eventually it's going to roll over as your highs, lower high here. It's going to roll over, and commodities, precious metals, and all that stuff is going to outperform. Completely agree. Bob Coleman says, Silver alert, we're on the verge of a serious dislocation in the silver market. And he's talking about these lease rates. They are just rocketing higher, which means they don't have the physical. That's SLV borrowing fee. Look at that thing rip. Rippity rip, rip, rip. Yeah, very interesting. David Burrows, he's got a nice little ratio chart here. It says there's clearly a structural change occurring in capital markets. Long-standing relationships are reversing. Software versus miners. Monthly subscriptions at fixed price versus prices that go up tomorrow if there is inflation today. So XME versus IGF. So that's miners versus software, short duration versus long duration assets. And here we are bottoming and heading higher. We've broken through a couple of downtrends. We're about to break through. If you draw a line going across here, this is going to be a double bottom, bottom one, bottom two, and then you draw a line going across here. Now, as these things go up, and as this becomes a little bit more apparent to everybody, we could go through volatility. One way that they can slow this move down, if they're going to try to, is chuck us into a recession. That is a possibility. The only thing that I find difficult is that their tax revenues would decline if they were to do that. And they need the revenues badly to balance the interest on the debt, which are an interest expense or payment. So I don't know what they're going to do here. They're in a tough place. They need to get interest rates down, but at the same time, they need to keep tax revenues up. I don't know. I don't know how they're going to balance this. I don't know. I guess they're just going to print money. Is how to balance it. I guess they're going to give out stimulus checks. Let's go give some stimulus checks. Yeah. Only 9 days in human history, silver was this overvalued compared to oil. 9 days in 2020 in the middle of a global lockdown. Oil is getting very cheap here compared to the metals. I don't mind if it takes 10 days. Do you? So let's see. I've got URA. It's just rocketing there. Let's see what that is. So crude oil divided by silver. I just want to see what it looks like. Yeah. So the way that I view this, we can see that there's lows here. We'll put a horizontal line through here. So this was a pretty good resistance line that we bounced off from the 80s, 98, 99. That was the bottom of the. So this is the bottom of a commodity bull market. Same with this one. Same as, well, this one here would be a bottom too. And we're back there again. And if you look, the line going across, I don't know if you guys can see that. The line here is where we're located right now. We are underneath all of the previous lows of other commodity bull markets, going all the way back to the early 1980s. What do you think this is going to do in the future? Do you think it's just going to continue to head lower? In the short term, it could. I'm not saying it can't. Or do you think this is a good time to be looking at it because we are so low? In fact, this to me looks like we've got a falling wedge with a false breakdown. And I don't know when this will bottom. It could bottom whenever. And then I think we're going to see the slingshot higher. The slingshot higher. And you know what's going to probably happen? They're going to send out stimulus checks or whatever is going to happen. And then we could see that reversal. Definitely. But we'll see. Maybe it takes some time. Here's another one. I thought that was it. This is interesting. This is big gold gain and big oil loss equals a historical anomaly. So this is a combo of big gold gain and big oil loss equals a historical anomaly. So what this is this is year over year price. So gold price year over year percent, oil price year over year percent. And then you can see the dot plots here. You can see very large discrepancies where gold goes up and oil goes up, 73, 74, 79. The 70s, they both went up together. And then we're in this anomaly here. We have gold going up and oil going down simultaneously. In fact, we haven't seen this in history. So my take on this is that this is going to go back up here. Why would this go back up here? Some people will say, I'll just start with this. They'll say this is an anomaly time frame, that gold's going to continue higher. We're going to see a permanent disconnect between gold and oil. And then they make a narrative. People realize, right? You can't have oil go down during a hyperinflation. They do realize that, right? And if you have massive inflation, that leads to oil. Like that is demand for oil. A lot of people will also say, we're going to get this huge inflationary environment, and they'll be like, well, house prices are going to go down. It's like, how? How? Like, if someone said, we're going to print a bunch more money, we're going to revalue your assets, because that money's got to go somewhere. We're going to revalue your assets way up. I think people are not going to buy homes if that own assets. If you don't own assets, then yeah, that's going to be tough. But I mean, if someone said we're going to 100x your account, I mean, I would be like, well, I'm going to spend it somehow, like at least some of it. You got to go spend it somehow. And when you spend it, it goes either in two locations for the most part for most people. They either go buy a house or another house, or they go buy a car, which is made of oil and then uses oil, or they go on vacations, which uses oil, or they travel. Yeah, vacations, travel uses oil, or they buy an electric car, which is made of oil, and the commodities that go into it are made of oil, or they have to put up more electricity lines because more people are buying electric vehicles, which is made of oil because we're mining all this stuff. Lubricants, tires, plastics, everything. All the money funnels down into assets somewhere, whether it's financial assets, hard assets, or whatever it is. Doesn't matter what it is. If money's in the system, it's sloshing around chasing crap. That's all it's doing. But this is an anomaly here. We're in an anomaly in 2025 where we're seeing a disconnect between gold and oil and the size of that disconnect. Usually it's in this general area of the dot plot, but these are extremes. Nick says oil is a cornerstone of the global economy. Suppressing the oil price has consequences. Less investment by the oil industry now due to low prices will lead to much higher prices in the future. Politicians never learn that meddling has unintended consequences. And the Trump administration oil price suppression is going to lead to all-time high oil prices over time. And this is the big thing is energy. When you bring down energy, everything comes down. The energy prices are way down. And he keeps talking about this. He keeps signaling it out. He doesn't signal anything else up, really, does he? Maybe a few other things, very few things, but he continues to talk about energy. Energy down, energy down. He's trying to talk it down. We'll see where the end price goes. Another thing, let me bring up oil real quick. So this is U.S. oil. I'm going to go to the line, back out, and then logarithmic. Uh, in my opinion, what he is facing is a very difficult situation. We are not in a consolidation. We are in a breakout. So that circle that we are located, roughly speaking, right where we're at, is right where this circle is, somewhere in this general area of where we're at. Maybe we're up here, and maybe we still have a washout sale, downside move first. That's possible. But I think we're in that general area where the circle's at. He's actually fighting the entire trend. The trend is up. The trend is a move and a break higher with time, in my opinion. Now, in the short term, we've been in a disinflationary kind of move, but he's fighting the big trend on the long term. We're starting to see things bottom like lithium, rare earths, all these different materials are bottoming. So this year, I like viewing it with the candles. Uh, this here's a downward move into a double bottom, and it's moving up. This is an inflation sensitive asset. From 2020, April of 2020, that went up all the way till November of 2021. Oil lags this a little bit behind. So if we were to let's throw up like XOP a little bit. You can see that oil lagged lithium here. You can see this lag where it kind of came down as lithium went up. We're doing the same thing right now. This is going up, and oil's kind of lagging here a little bit behind it. I think everything is in motion for oil to take off maybe in like 6 months or something, right? But we're seeing lithium, we're seeing steel breakout here. We're trying to at least. Here we are. We're doing a back test right now of steel. We've got COPX, which has been ripping, and I know we're down today, but that's also right at all-time highs. Now, could we loop around? Could we do something? Yeah, all that's possible. Definitely possible. But I think again with that with the gold, the Dow Jones and gold to the Mag 7 that we saw earlier today, if that's breaking down in favor of gold, these all go up. And that's exactly what we're seeing. We're seeing a falling wedge to a double bottom to a breakout to a retest, and then that's supposed to be a check mark. And then we are breaking through all this. That is not a bearish setup here. That's bullish. It's broken out above resistance. So we've got a bullish setup in COPX, a bullish setup in SLX developing, which is a falling wedge double bottom. And notice it's the same pattern. Let's throw COPX up here. COPX, it's the same dang pattern. This is all driven by money flows. It's driven by currency exchange rate differences, BRL, USD. None of these charts are breaking down. I know a lot of people are scared. The falling wedge into a double bottom, and that's ready to work its way on up with time. I don't know the day-to-day movements. I don't think anyone knows the day-to-day movements in here, but it's working its way on up with time. Could we come back like this? We could. Who knows what the short term is going to have? But the big picture view is all intact across the board of all these different commodities. REMX, which is rare earths, they've bottomed. They've been chopping higher here. They've been killing it. Falling wedge into a double bottom. That also looks good. URA, another one, which is a falling wedge into a big bottoming. Maybe it's a double bottom there with a slingshot. There's your slingshot out of the bottom. This is your breakout, your retest. There are people here on Twitter, I should say, that were stating that this here is a shoulder, head, shoulder, and that this was going to break back down. It didn't do that. It didn't do that because we are now in cycle. This is the base. This is a move higher. And so when I say this about URA, I am also saying this about steel, that this is the bottom and that this is breaking out. I'm also saying that about COPX, that this is the bottom and this is the breaking out. I am also saying that about energy. Because we have never seen a bull market where energy goes down and everything else goes up. So yes, I understand that we could loop around, we could do something in the short term, but that's going to break higher. How do I know that? Because everything in commodity bull markets right now is breaking higher. All of them. Wave 1, wave 2, this is your pattern, and there's your move higher. This is now wave 3. We are ripping. So when we look at something like XOP, this is wave 1, this is wave 2, and even though we might dabble around here and move around, I think we're breaking higher. I think that this fractal is going to be is going to happen, or be something similar to it. What this fractal is just a flipped image of this down move. So this down move there is a flipped image of this move here. And what this is wave 1, this is wave 2, and then it goes into wave 3. And we're located somewhere like over here, is my guess. So if I were to kind of put that back over it, and people always get scared. They get scared when things don't, go up straight. If we get a pullback or a down move, people get scared and they say, oh, well, we're going to get this huge recession. It's going to pull back. They make up all these reasons of why to be bearish. But these are big picture view kind of patterns. I'm going to remain bullish on oil. Yeah, oil, lithium, on all these sectors. I'm not in any one sector completely. I'm across the entire group of them. Extreme oppression of oil price as a precursor to rebate checks and QE. Are they in there knocking down the oil price because it's a precursor to rebate checks and QE that they're going to do? They could. That very well could be the case. Very well. Lynn Alden says, no, AI. So this was in response to um, money printing being inflationary and AI being deflationary. That was the original comment. And she says, no, AI has finite deflationary effects, whereas fiat has no upper limit on its ability to offset said deflation, which I agree with Lynn. You print a whole bunch of money, AI will not overpower that. The money that is created is demand for goods and services. That is what inflation is. Inflation is the printing of money and putting goods and services into a more scarce environment. So if they print $1 million and then they print another million, so now you went from 1 million to 2 million, and they did that overnight. We didn't increase our goods and services overnight by an equal amount of it going up. Therefore, that is inflationary. Now, if you put the money in the hands of people and they're going to say, okay, I'm going to do something with this. I'm going to either put it in the bank, I'm going to buy something with it, I'm going to invest it. All of those things are inflationary. It pushes prices up somewhere, whether it's stock prices, whether it is food prices, if they buy more food or more expensive food, or whatever the heck they're buying. Another way that they're doing this, these stimulus checks, I mean, just to throw it out there, if the banks are having liquidity problems, a way to reliquify the banks is to give everyone stimulus checks. Because what they do is they put all that money into the bank and then the bank gets the money. I don't know if people think about that, but that is something that they, I think, are doing. They did it in 2020, and I just said, you know what? Is this just a bailout? A it's a hidden bailout under stimulus checks to recapitalize the banks. It could be. Capitalism is in serious danger because it's becoming impossible to justify wealth as earned. If someone earns his wealth, like Carnegie, you should celebrate. You build factories and increase overall wealth, employ people. That's earned. Now we have streamers and we have people who bought Bitcoin in 2012 who say they've earned their Hawaii lifestyle. They didn't do anything. And frankly, investors who made fortunes on network effects didn't do anything. Venture capital is not Rockefeller and the railroads. This is all totally unstable. It doesn't help that we have meme coins, which are just bribes, coming from all over, including the White House. If you want to save capitalism from the communists nipping at your heels, and they are, you have to realize the system as it exists immiserates people in large numbers who would otherwise accept wealth disparities. It's in the interest of everyone to get this under control because if any upheaval occurs, we will all be broke. And that is weird. And what people are doing is they're making money off of money sloshing around in the system. And if the money happens to slosh in your direction, well, you just made a bunch of money. Other people, the way it used to work is that you had to go and work and make something that is a usable product or service. Now it's just, oh, we'll buy this intangible garbage, Bitcoin. Money sloshes towards us. Hey, we got rich. I did something for it. No, it's just money sloshing around the system. And money sloshing around the system is just a bunch of inflation. They print money, throws it in the system, and then people get lucky if they're in the right asset at the right time as money sloshes into that area. And that's kind of what investing is. Investing is just money flowing from one sector to another and sloshing around the system. And all you're doing is front running the sloshes. CVE is up 63% over the past 6 months, 18% year to date. That's an oil company. Seems NCP and House Algo has worked yet again, and that is Cenovus. The reason I'm sharing this isn't because it's up. Well, I mean, it is because it's up. I'm not sharing the company because of the company. It's an oil company where oil prices haven't really gone anywhere. But Cenovus is up 63% the past 6 months and 18% year to date, with oil prices going nowhere. My question to everyone is, does that seem like a bear market or does that seem like a bull market? And why are some of these companies up year to date with oil where it's at? Is it front running something? Are they positioning for something that might be occurring? I don't know. It's a question. This isn't bear market behavior. If you go back and you look at something like XOP back in 2018, we were seeing a down move the entire way when that yield curve had uninverted. And the oil price was in a bear market. There's the oil price moving lower too. Now, what we're seeing more recently, and I'm gonna make it a little bit more apparent here. I'm gonna do CVE divided by Canadian crude because that's really what they sell. And what we see here, and I haven't looked at this one, I haven't really done anything with it. Why are we breaking out? Why are we doing that? Because we're in a bull market. That's why. And people don't know that. That's where they get all afraid. The bear market of 2018, you can see us jettisoning lower into a lower area here over that time frame. That's a bear market when the equities underperform the commodity itself. So what if we are breaking out here and we're doing a retest move down here before breaking higher? Man, this is going to get everyone on the wrong side. Everyone will be on the wrong side. And I can do this with other things too. Here's XOP divided by crude oil. I haven't seen this, I haven't looked at this. Why are we breaking to the upside here? And could we get a return move? Could we pull back? We could. Not saying we can't. But why are people positioning in the equities then? Why are we breaking out against crude oil? Why are people asking these questions? Because we're in a bull market and people don't even know it. They don't even know it. I love it. I love it. Here's CNQ. There's another one just to show you guys. Should close the gap at 51. Does that look like a bearish chart? Let's look at it. Let's see what it's doing today just for the heck of it. Down 2.88, but let me back out here. So this is the bull market. This here is a consolidation. Big old consolidation here, right there. This whole thing is the consolidation here. Now, this is a bigger company. It's a good company. Don't get me wrong. It's really good. This here is the bottom of the bear market. A lot of people calling for a big move in oil lower. This is the end of the consolidation. This is the slingshot higher up. We've broken out of the consolidation, been heading higher. This is wave one. There's the bottom of wave two, and now we're trying to work our way on up into what I think is going to be wave three, and that's going to be a much, much higher move way, way up here. And I have to go into some of these companies because people, I don't think they believe that we're in a bull market. It's like, well, look, what about these companies? What about CNQ divided by Canadian crude? That's in a bull market, guys. And I am cherry picking some of these. The bull market started here in 2022, and now we're in a consolidation, trying to basically break higher here to the upside. So I understand there's a lot of negative narratives out there about crude oil. I am remaining positive on the sector. Now, some people will say, well, crude oil is going to go down. It's going to go down. Well, the companies that a lot of us are in are up year to date. Now, I don't know about this one. I'm not going to share the companies that we are in. This one's flat year to date. Suncor is up 12%. And that also, I'm just sticking to the big companies so you guys can see it. This is your consolidation. This is your breakout here of that consolidation, and we're basically sitting on top of it. When you sit on top of big patterns like this pattern there, that's a bullish formation. That is not bearish. Bearish is when you run up like this and then you break lower, and then you're stuck in the consolidation. That's bearish. When you break out and you're sitting on top like this, that's bullish. This is a bullish formation. So just wanted to bring that up. Gold and Bitcoin are acting like we're about to enter into a period of hyperinflation, but no one realizes that AI is deflationary and that you can create much more money than you can deflate your way with AI. I'll just say that. And also, it says still few people understand this. Gold's rocketing higher and silver's just starting to move. People don't understand that. And to me, this is an easy play here, guys. Silver's going to go way up. It's going to go way up. It's going to follow gold. And then eventually, in about 6 months' time or maybe a year time, something like that, copper's going to follow, steel's going to follow, which it already is. Oil's going to follow, everything's going to follow. So when people say, oh, you're going to have a hyper stagflationary environment or a very stagflationary environment, my question then is if all this money comes into the system, have we ever seen in history commodities not go up while gold and silver rocket higher? In my opinion, I don't think we've ever seen that. So is this time different? Is this time really different? I don't think so. I think oil's going to follow. I think silver's going to follow. I think platinum's going to rip. I think copper's going to rip. I don't know. When you put a bunch of money in people's hands, that is demand. That is what puts everything into a shortage. That is what the definition of inflation is. And if all of these assets are priced in dollars and you're destroying the purchasing power of that dollar, everything goes up. Now, where people, I guess what everyone's arguing is where's the demand for whatever products in the system? Where will that be located? And how is the money going to slosh towards that demand? And then I think what they're trying to say is under a slowdown, even though they print a bunch of money, uh, you're going to have that slowdown effect. The economy slowing down. So we would have money rotating into uh, preserving purchasing power, like gold and silver, and then it would not flow into those things that only benefit when the economy is good. But if someone gave me a whole bunch of money, I'm going to do something with it. So that's my counter, I guess, my counter to it. Money's got to flow somewhere. If people buy things, they're buying oil for the most part. And I'm not talking like oil directly. I don't know if people understand. Oil is in everything. Everything is oil. When they go buy copper, you're buying oil. And they'll be like, why is that? You got to dig it out of the ground. You got to transport it. You got to use lubricants, tires, and plastics to get it out of the ground. Everything that is manufactured in that basically comes from a derivative of oil. So everything in the world, whether it's gold, silver, copper, transmission lines, houses being built, they are all derivatives of oil for the most part. The asphalt roofs, the lumber, and when you cut it, and the gasoline that is used to cut it, or diesel, and the transportation, is just everything. The lubricants, the plastics, the trucks are made of it. I mean, everything. Breaking, Scott Bessent says U.S. Treasury ready to take immediate exceptional measures to ensure market stability. What does that mean? I mean, what is going on here? Is something breaking? And what does it mean by exceptional measures? Are they just going to go out and print a bunch of money? Is that what he means? Because, I mean, that's kind of what I'm reading. Large amounts of money aren't made by buying what everybody likes. They're made by buying what everybody underestimates, says Howard Marks. Underestimates. What does that mean? What does underestimate mean? what I see and the way that I make money is I just buy crap that no one's looking at. And that's what I think by underestimates. It's not really underestimates. I think it's just not paying attention to. When prices don't go up, everyone just doesn't pay attention to it. They just aren't looking. Avi says, no need to overthink silver's latest move to $50 and the sharp pullback that followed. This is a critical level, and nobody knows how long it will take for the market to digest it. What I do know is that triple tops rarely hold. And with gold still trading at roughly 80 times the price of silver, I wouldn't be betting against a breakout here. If you ask me, an explosive move feels imminent. Explosive move, perhaps, coming in silver. And I agree. And I just go back to this chart, this gold silver one, right? GLD and SLV. It's going to rip. It's got the same fractal, it's got the same move, and it just hasn't moved yet. And silver follows gold. Gold's already breaking out. So tell me how it's not going to move. And then you know what else follows silver? Check this out. XAG, USD, there's silver, right? Let's just put US oil on top of it, right? We get these moves, and they all kind of move roughly together. They move roughly together. And it doesn't mean that they time everything perfectly, but they're all moving together quite well. That's silver and oil. They move together most of the time. And what I think is going to happen is they're going to devalue the dollar. We're going to get a dollar devaluation. And I don't know if we're there yet. We've got dollar, we'll see. And every bull market, these commodity bull markets occur when the dollar drops. And I'm watching for this to potentially drop at some point. Short term, had some dollar strength short term. No denying that. Read the charts. Moving down, so narrative is oil glut. Reality, global commercial oil inventories are in decline. Wait, what? Narrative's oil glut. Commercial oil inventories are in decline. We're not getting the glut there, at least. Now, could it hit? Maybe the oil's in the tankers and it's coming. Yeah, maybe. Maybe that's still coming. We'll see. We'll see what happens here. Says this is an excellent chart from Barclays on the global oil market imbalance so far this year. Global total oil inventories seem to be building at a slower than expected pace so far this year. We're building a little bit, but not a ton. Now this one says we're declining. Who's right? I don't know. This is global. This is global total inventories. So I've got two conflicting pieces of information. One says we're in declining a little bit. This one's saying that we're building a little bit, 500 to a million. I'm guessing this is 500 to a million barrels a day, about 500,000 barrels a day. Or sorry, what is the actual unit of measure here? This just says year. We're building. I'll just say that we're building. I don't know what the rate is. Besant's recent comments on the Argentine peso being deeply undervalued, alongside a currency swap deal that effectively involved the direct purchase of pesos, mark a fundamental shift in how the U.S. engages in foreign exchange policy. He framed it as a chance to buy low and sell high, a statement with no modern precedent. Past swaps or interventions were precautionary, not directional investments or proactive support of emerging market currencies. In effect, Besant admitted that the US dollar is overvalued in his view. While some will call this a bailout, the structure shows otherwise. The US is taking an active, risk-bearing position in the peso. There are historical parallels, but none involved in outright purchase of the foreign currency. This comes as the Fed and Treasury enforce fiscal dominance through financial repression, with U.S. interest costs now at the highest share of GDP among major economies, and an administration that openly sees the dollar as too strong. The implications are profound in his view. A turning dollar cycle could drive capital towards emerging markets and hard assets and away from U.S.-centric exposure. Completely agree. We're just waiting for that dollar to break and drop for a commodity bull market. We're just waiting for that to occur. And you can see it in all the currency exchange rates. They're all set up for that to occur. So when I talk about, like, we could do AUD USD, that's the Australian dollar. Now it's down right now, but we're waiting for this to basically break out. Last bull market was this bull market back here. I don't know why that's not coming up. And then we're waiting for that to break and move higher. Right now, it just hasn't done it. We can also look at the Canadian USD, which is another one. This is last bull market there for commodities, and we're just waiting for this to break out. So everything's in alignment. We're just waiting for that to basically break and realize the commodity bull market. Like we said, we saw the gold to Mag 7 up above. That's all breaking out, and that also occurs under these types of conditions. That front runs it. It front runs it. So it's all lining up. We've got high heat. Most of what you're seeing in oil is fake. It will become obvious over the next couple of months. Higher prices are coming, in his view. Looks like we're entering the final phase of the gold to oil ratio blowout, which, yeah, we're coming somewhere. It'll be a final phase. Now, some people think, oh, well, gold's the spot to be. No, it's not. Gold's the spot to be when it's down here, not when it's up here. I think we're in the final phase. I agree with that. We're getting close. And that's all I've got. That's where we're going to end it. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special coupon code. We have a 5 p.m. Mountain Time Sunday Q&A session coming up this weekend. All right, guys. That's all I've got. See ya.